Hi everyone, it's me again, Adrian at Trade Uni, senior trader and tutor and mentor. Wanted to go through a few charts with you today because obviously with this volatility, heightened market movements, and the troublesome conflict in the Middle East that's kicked off, I want to show you where our charts, our system, our strategy analysis has been. We all want to be extra conservative during these times. Whilst money can be made, it really is the process of protecting the capital as well for any downside shocks and risk. So on the screen now you have Aussie Swiss, and our last entry point was neatly here at the 54,970 level, and that happened on Monday. You could have a pending order there and really look to gain with that upward move, that propulsion we've seen there. Also worth noting as well, when the US market shuts and the Australasian or markets open, there is a kind of overnight crossover for liquidity. And what we've just highlighted here, can you see like the extreme candles that are happening as well? Just be aware of that if you're trading overnight, because whilst one plug comes out and one goes in, liquidity can just be a little bit thinner, and it creates kind of a fictitious price, which is still valid, but again it switches back on slowly over a period of time. So if you are trading, be wary that your stops need to be placed appropriately too. Every time this kind of uptrend happens and we get a switch into bullish momentum, we get a decent upward tick. And we've had 1, 2, 3, 4, 5, 6, 7, 8 trades. I can't really count these. That one is a profitable one, or that one. So if we've won 6 out of 8, we're in the pound seats, aren't we? And we're making money, and that's where we need to be, by being structured, conservative, considered, and being process led and driven. Obviously doing it that way is going to help with our mindset. Let's have a look at Aussie yen. Another one here. We just played really a 1-to-1 risk reward strategy on new momentum shifts. Okay, and here we highlight buying in line with the trend underlines will underline the profitability, because you're trading the same way. It's hopefully going to give you a bit more consistency and aid your probability to success. I don't mind highlighting when stops have been hit. It's fair enough. It happens. This is a business. We do take losses because we're following a strategy and a process. Ideally, we want to make hay while the sun shines. More times than not, if we can get 60 to 70% win rate with a strategy, we're doing really, really well. So next one here, I've got Aussie New Zealand. So quite a few Aussie pairs here have been quite nice. And again, one thing to remember is, we're looking for trends, we're looking for structure, we're looking for pattern recognition. And one thing in technical analysis, you do get your historic repetitive patterns repeat themselves. And that's one of the mantras of this. If you look at that, if it's done it before, it's highly likely to do it again. And quickly here, remember buying in the bull trend or uptrend is more preferable. We had a break here. Yeah, took a short, didn't happen. Okay, it came back to this kind of longer trend line here. We do need 3 valid touches for a trend line. So we didn't know this was going to hold, but once it broke this kind of structure here, kind of equidistant, you could make that an equidistance channel, a small pattern here like this, I guess, could be a little bit more sexy. Once this happens, we need to close and go long. So that's stop and reversing. Don't be scared to do that. We're not married to a position. We're not fund managed, not pension managed. We're traders looking to capture a market move. And here we did there, as you move here again, pull back to the trend line. We've got our 3rd valid touch. Thanks very much. Positive momentum here on a MACD, if you're familiar with that. If not, it stands for moving average convergence divergence. A really good for a change in direction of momentum. And here we've got something called relative vigor. Relative vigor is an average of 10 days. If it closes higher than where it opened, it's bullish. If it closes lower over 10 days, the average is going to be bearish. And this here is a bullish phase. This here will be a bearish phase. So bearish there, bullish here. Same with the MACD. The bearish phase here on that cross with a new bullish phase here. Sometimes what I like to do as well, and we tell our students, is that we like to put in, when you think the trade is happening, put in a vertical line like that. What's happening? Yes, we've got all new bullish metrics kicking in. look at the propulsion. We've made money. We're happy. You can even just follow. You can get in here and be in profit by just maybe following that kind of stop level here. As those parabolics tick up, you follow the parabolics. You're in profit. Your trade's in profit. You got a free trade. For me, I'm happy to sell. I think that's a really good level of profitability that you can take out of that trade. But again, you might want to wait and be patient and follow the parabolics as a kind of risk management tool. Have a look at Aussie New Zealand. We've looked at Aussie New Zealand. CAD Yen will be the next one. I think this is kind of a valid trade that's kicking off now. We also highlight we buy new highs. Well, you'll probably say, Adrian, why on earth would you do that? Well, it's uncharted territory. It's never been there before. We don't need to chart it. It's in an uptrend. Okay, there's nothing to chart. Normally, buying a high will create some alpha capture, some idea, some opportunity to capture a bit of cash. This morning and today, we've taken a long here. All right, so we're small offside. Nothing really matters there, but we've taken a small 1-to-1. You can see the structure here. We're looking for that to push up, and we'll monitor that over the next 24, 48 hours, or however long it takes to get there. So we know we're only risking 1% per trade, and we're in a good area of that trade to hopefully, the trade input structure is still fairly sound. Talked about a lot of buying in trend and playing the long side, but what about the short side? Well, you're going to get it here. We see that kind of nice downward trend here, Euro, Aussie dollar. If you'd have sold every bearish momentum flip, you'd be in the pound seats, you'd be making money. Guess what? If you follow that robust process, you're going to find your mindsets a lot easier. And here we highlight what happened here, a false break. Hang on. Did I tell you if you're trading an overnight position, an overnight currency, my bottom dollar this is at 10 o'clock at night, so it could be one of those funny false candles. Hang on a sec. Yes, it is. Sunday. It's opened up on the Sunday evening, so even less liquidity because it's being shut for the weekend. Obviously, you've had that false candle there, so I wouldn't be rushing into to cancel that trade. I'd just be watching it. But again, the common theme is if you're trading in line with the underlying trend, you can take the longs or shorts in this example, and it will work nicely in your favor. Bank some cash while you can. All right, so that's the idea of what we're trading, how we're trading. Why are we trading? Really, to make money. That's the end result. It is a business. That's what we need to do. One more currency pair we can look at too, dollar yen. All right, we've highlighted a price struggles here, but again, we're in an uptrend. We've taken a long here. It's nearly hit our target, funny enough. If you feel as a trader you get jittery when it's near the target, well, just move your stop to entry to remove the risk. Yeah, you'll soon get used to it the more professional, the longer you do it. But it is worth highlighting that prices struggle at this current or near this level we're at. So we'd let that run out for maybe the end of the trading session, something like that. We're happy to close. This level here, unfortunately, I did take a short a bit prematurely, really, because it didn't really materialize. We closed below, we did try, but again, as I showed you, just reverse it. If it's not as per we expect it to happen, it's not moving as per our strategy, don't be afraid to cut it. All right, we're making more of following the trend anyway. You've made your money back on this last trade anyway, so that's part and parcel, swings and roundabouts of trading. So, as I said earlier, with all the noise, all the conflict, all the stuff that's going on in the Middle East, what's going to be the most kind of volatile asset? You've guessed it, crude. Okay, our last crude buy note, or buy level was the 27th of Feb at 66,627. Okay, if you'd have followed the parabolics up like we showed you on that previous example, and you kind of went long here and just placed your stop loss in line with those parabolics, then look at that. Wow, you'd have got out at around the 94, 95 level from 66,627. You've made another 30, 35, 40 bucks on that position, and that would be a superb trade to have. Obviously, noise, wars, everything is going to take you it really is going to move, especially in the Middle East, because the supply of oil and crude could be choked because of what's happening. But again, all I'm showing you here is that similar structure, and you can see even back from here, we buy, it's holding the 200-day moving average. It's holding, even if you'd have bought every time it flipped and flipped and flipped and flipped and waited to that move happen there, that's a solid bit of analysis. It's a solid trade. That's what I wanted to show you. Hope you have great days. Please review all the videos that we do as well. And we're online. Go and visit us at www.trade-uni.com. Have a look for any webinars and bits and bobs that we're doing. It'd be great to see you. Have a great day, traders, and catch up soon.